I'll hand over to Mr Wallahan.
Thank you, Chair. Thank you, Governor, and thank you to your team for appearing before us today. We do appreciate it. I have two topics I'd like to cover with you, one on housing and then the other on stage 3. To housing, I'd like to specifically focus on the Bank of Mum and Dad. In my home city of Melbourne, there's about 972 suburbs. If we take the average income of about $93,000 and we take the median house, which is a modest house, we would see, assuming a deposit of 20% is saved, it's a big assumption, that person on an average income could only afford 3 out of 972 houses, and it only rises to 52 for units. So we're now seeing the Bank of Mum and Dad become about the 9th largest lender, an option not open to everyone. So my question to you is, how do you measure the scale of the loans through the Bank of Mum and Dad, and do you account for gifts and undocumented loans in that?
I think the answer to that is we don't actually know what's going on there. We get very good data on lending from financial institutions, and we get some, even get very specific individual data, anonymised in a thing called our securitisation database, which gives us information on individual loans, incomes, those sorts of things. But we don't have any information on bequests, Bank of Mum and Dad, anything like that.
Thank you. Is that something you think would be useful for the bank to have data on, and is it something you would consider looking at?
I don't think it really plays into our thinking about financial conditions. We obviously monitor growth of credit. As I said, we've got a lot of information on that sort of thing. We can determine, we've got a lot of information on interest rates, real-time information on interest rates. But I'm not sure that sort of information on sort of bequests and Bank of Mum and Dad is additional information which would help us define financial conditions more appropriately. I think where you see that turn up is you see it turn up in things like housing prices, which we can't do anything about. It's housing prices. Again, we talk about supply and demand. That's really what is determining housing prices and rents as well. But I'm not sure that information on the Bank of Mum and Dad is going to help us really define financial conditions more appropriately than we currently do.
Do you think generally, without having access to the data, that it would have an impact on housing demand and therefore inflation?
Well, it's to the extent that the Bank of Mum and Dad is bringing forward wealth and providing it to another generation and helping them to purchase houses, yes, it is adding to demand. But I don't think that the first order effect here is Bank of Mum and Dad. I think the first order effect here is about supply of well-located land and housing versus demand.
Thank you. I'd like to move on to the stage 3 decision. I'd like to focus on the process of consultation that has been flagged with you. The Treasurer said he had assurances from you around the implications of stage 3. On radio, he did not want to speak for you, which is fair enough. I have some questions on those circumstances. The first is this: when did you first become aware that there was an intention to make those changes?
So I spoke with Stephen Kennedy, Secretary of the Treasury, in a few days ahead of what he was thinking of taking to Cabinet. He talked me through the information. Me and my team had a look at the sorts of Treasury calculations that were going into that, and Treasury has subsequently published their work on that. We had a look at it. I can get Marion to talk about our forecasting process if you like, but our forecasting process does not involve looking at individual cohorts and tax changes. It basically involves what's the fiscal envelope of this, what was the sort of money being handed to the household sector as a whole as a result of the tax cuts, and what does that mean? And that's already embedded in our inflation forecast because it was legislation, it's already there. So I spoke with Stephen at reasonable length. My team had a look at it as well, and we basically confirmed that because the fiscal envelope was the same, basically pretty much the same amount of money which was going, it was just distributed differently, that it wasn't going to have any implications for our inflation forecasts.
Your answers, thank you. Your answers have been quite clear on your view on the consequences. But back to the process, do you recall when that consultation was with Dr. Kennedy?
It was a few days before, I believe, it went to Cabinet. So it was prior to that, and it was in January, and I think I'd just come back from holidays.
Fair enough. And do you recall? So you didn't have direct consultation with the Treasurer or the Treasurer's staff. It was through Dr. Kennedy. Is that right? I did speak to the Treasurer, but I speak to the Treasurer on a regular basis, and I told him what I told Stephen. It was after I'd spoken to Stephen, but yes, I got the laydown from Stephen. The Treasurer has said that he consulted you on a number of occasions. Is it fair to say that he consulted you on a number of occasions about this topic? It was moving fairly quickly in January, and I talk to the Treasurer quite a lot. He picks up the phone to me, I pick up the phone to him. We have an open dialogue. I couldn't say how many times I spoke to him about this. Do you recall if any of those consultations happened before Christmas last year?
No, I don't recall. No, I don't recall.
And when you spoke with Dr. Kennedy, was that in his capacity as the Secretary or as a board member? Does he swap hats when he speaks to you?
No, that was in his capacity as Secretary, and it wasn't as board member. But Stephen, when Stephen comes to the board, he is a board member. He is not representing the government or the Treasury. Apart from that, when I deal with Stephen, I am often dealing, as the review asked us to do. I am, fiscal and monetary policy, they're independent, but we need to be taking into account one another's movements.
And we now understand from Senate questions that there was a document provided to Mr. Kennedy. Was that document provided to you as well?
Yes, it was provided to me, and that was the gist on which I had the conversation with Stephen. And
were you given that document in advance of your discussion with him?
He rang and he talked me through the changes, and then he said he would show me a document. And I believe the document is pretty much the document that has subsequently been published, which was their analysis of the process of the statutory.
And when you gave your opinion, was that I think you indicated your staff and your had given you advice on that? Did they have the document when they prepared that advice to you?
I shared with a very limited number of staff the document, and we had a look at it and we had a discussion about it.
You have previously declined to comment on the original Stage 3 changes, and you noted, I'm sorry if I burble you, but you noticed the risk of politicising the RBA, and you said that at an ABE dinner on the 22nd of November. Do you think, given the Treasurer has referred to your assurances here, that that concern is now enlivened?
No, I don't think they're politicising the RBA. It's a legitimate question to ask about whether or not, given we're fighting high inflation, it's a legitimate question to ask, and everyone's asking it, what are the implications for inflation? And the review pointed out that there's a need, as I said, a need for monetary policy and fiscal policy, though they are independent, to make sure that they're taking into account the influences on one another. So I don't think it's politicising. I think it's quite proper that they're considering the inflationary implications of the sorts of decisions they're taking. Governments, as I said the other day, governments have got a very complex job. They are balancing a number of different priorities, and they're trying to do that in a way, certainly the Treasurer has spoken about trying to do that in a way, in this particular case, of making sure that they don't add to inflationary pressures.
And did you give that advice in writing, or was it just an oral discussion?
It was an oral discussion.
Have you been asked to give assurances on other policies or potential changes?
No, I don't believe I have.
Thank you. Just I think I've got a few minutes left.
3 minutes.
3 minutes, thank you. To productivity and labour costs, you noted in your media address the questions and answers that you had with the press that there's assumptions that productivity will return to trend. What is the basis for that, and what are the implications if you're wrong?
So I think we've answered this question a number of times today.
Yeah.
The basis of it is that productivity is a long-run concept. It's been measured. Productivity has been moving around a lot due to the pandemic. You see overseas that same sorts of things have happened, so it's, apart from the US, but everywhere else has had similar issues. We have business investment going on, we have technology change going on. There is no particular reasons to expect that productivity won't go back to something which is pre-pandemic. But ultimately, productivity is not our business. It's the business of the Productivity Commission and the government. We take what we're given. We have to make some assumptions for the purposes of our forecasts, and that's the way we fold it into our analysis.
Thank you, Governor. And Chair, just a follow-up to a previous question. The document that was provided to you, just to confirm, did you share that document? You shared it with a limited number of your team? Is that
a limited number of my team, okay. Yes.
Thank you. Thank you, Governor, and thank you, Chair.